Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to talk about Tesla stock, so ticker symbol TSLA, which if you follow my channel you know that I have been buying Tesla during this drop. I told you in previous videos that the more it was getting near 500 and the more it was a nice price to buy in my opinion, okay? So I bought the stock over there and now interesting we had the first data actually from Q1 in deliveries, which are 184,000 vehicles delivered, so they beat expectations. Now obviously the market is up in the pre-market session 7.55%. Now in today's video guys I want to show you actually my valuation on Tesla, and I want to show you what are the price targets and actually what is the fair price according to that valuation. And we are gonna see together also the bull case, okay, with price targets and everything. So the only thing I ask you guys as always is please another like. It's very important. You help me to reach more people. It's the only way to get it noticed on YouTube, so I thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so here we go. This is the entire model spreadsheet that I have been doing about Tesla. Basically, I have the entire Tesla business over there trying to see the past 5 years and then try to estimate the next 5 years. Obviously it's quite long, so I'm not gonna go through every single detail of it. However, I try to explain you briefly what's important about this, okay? So try to make you understand what's my idea, why I bought Tesla and what I expect from Tesla going on in the future, okay, with real number, because a lot of times we just see people actually talking about the things, but I like to see numbers because it's the only way to actually understand what to expect from a company. So here we go, deliveries over there from 2016 to 2020, they went up in an average growth rate of 64.7%, which is massive. Going on from 76,000 vehicles to 500,000 vehicles in 2020. The average cost per vehicle dropped, okay, and this is absolutely normal because the more vehicle you sell, the more the price has to go down, okay? Otherwise you just do niche vehicles like Ferrari, Lamborghini, etc. But Tesla wants to reach the masses, so as they move on they have to put this down, and this is what we have seen in the past. It will continue in the future. That's absolutely normal. Then Tesla business, it's mainly split in three categories. So we have the automotive revenues, then the B over there is services and other, which is related to the automotive revenues. And then we have Tesla energy and storage, okay, solar, all this kind of stuff. Now for the A, which is the automotive revenues, is the main part of Tesla business. And as we can see from here, it went on the growth average of 46.78%. Gross margins have been around 25. Now Elon Musk is saying that the target for the automotive business is to have 30% in gross margins. The average has been 23.68%. Then, as I told you, the other one, services and revenues. This is like related to cars because actually is everything, like for example, if you break something, if you need a service, or if you need a replacement of an item in your car, or also Tesla insurance, okay? It's all related to that. Now, what's the problem about this is that this business actually is negative in terms of gross margins, but it's very important to actually keep the customer comfortable. So to satisfy them, that makes the automotive revenues actually increase. So it's related, and I calculated it as a percentage of the automotive revenues. And we can see that on average has been 8.8%. What that means is that you should add for each dollar in automotive revenues 8.8 cents in services and others, okay? So that altogether is $1.08. I hope it's clear. Now, the last one that we had in the past, and we are going to continue to see in the future, is Tesla Energy, which in terms of gross margin has been positive, slightly positive in 2020, but by the way, we had the pandemic, and we have seen that it went 10x, more than 10x in just 5 years, okay? So Even though everyone is looking at cars, Tesla energy business is still is huge, and I'm gonna continue to forward that going on in the future. Obviously, that's the total revenue that we had. Then I calculated the EBITDA, free cash flow to equity. We can see that Tesla diluted shareholders quite a lot. Okay, so to get equity in order to build manufacturing facilities and all this kind of stuff. And we can see that obviously in terms of AV to EBITDA multiple and price to sales ratio multiple, actually in 2020 and 2019 kind of exploded, as we have seen with the price. Now, we are going to try to take that and forecast it into the future. Before we move forward, actually it's important to see, and that's pretty clear to everyone actually, I think, that the automotive business, so pure automotive business, is a huge chunk of the total business of Tesla. Okay, we have seen that they started with almost 91%. That percentage decreased over time, but on average we are still at 86% of the total business in terms of divisions. Now, obviously, going on in the future with the introduction of hopefully Robotaxi and the continued increase of energy, I think that this percentage will decrease over time a little bit. Let's now move forward to the future to try to understand what, in my opinion, can be a bull case, a reasonable bull case for Tesla. And then before to end the video, I will also show you what is the dream case scenario if everything goes as Elon Musk said. But let's start with the more reasonable one. So first of all, we have to see 2025 EV sales in terms of millions. Now, here there are different estimates, not just for Tesla, okay? This is the total global market in terms of millions of vehicles delivered. The average is very near to what Deloitte are saying, around 20 million vehicles by 2025. Now, this is not just cars, okay? So our vehicles, you can guess trucks or all the stuff as well. Now, for this more reasonable bull case scenario, let's go on and do what Elon Musk actually said. And it's the average 50% growth in deliveries over the next few years, okay? So that's the objective. And the overall will be that Tesla reaches in 2025 20% basically of this market. So we can see that we start from deliveries and we go from, actually the estimate is around 900,000 for 2021. We have seen that they beat expectation in Q1, and we have to remember that historically Q1 is the weaker one for Tesla in terms of deliveries. The range between 800,000 and 1 million, in my opinion, is feasible for Tesla this year. Then moving on until reaching basically 4.1 million vehicles delivered in 2025. And that would mean around 20% of the market that I showed you. The average growth rate is 53%, in line with basically what Elon Musk said. The average cost per vehicle in 2020 was $54.5 thousand, and I'm gonna move this lower going on in the future, as I explained to you before. Going on from 51,000 until 42,000. Now we know that Tesla is actually working on a cheaper car, so probably will push this even lower than that. You multiply the average cost per the deliveries and you have the total automotive revenues, which is this one. Starting off from 45.9 billion in 2021. Now 2021, if they do what they are trying to do, it's probably the biggest jump in terms of deliveries, in terms of revenues. As we can see from here, is an 80%, moving from 500,000 to 900,000. And then also as well, the automotive revenue will jump as well. Going on until 2025 with 172.6 billion from the automotive industry. Now, moving on into the next division, the B, services and others. I told you that on average, we were going to add 8.8% of the automotive revenues. Then we have the C division, which is energy and storage for Tesla. And moving forward, actually considering also Biden's plan, with investments in renewable energy, infrastructure, all this kind of stuff, I say that this sector is reasonable to think that it will continue to move forward at a 35% growth, between basically 35 and 40% growth over the next 5 years. Moving on from a 2.7 billion in revenue in 2021 to actually 10.3 billion in 2025. Now here, guys, it comes the magic. Here it comes what everyone is talking about. Is actually difficult to estimate the impact of this one over the Tesla's business, because this could be huge. This could be what justifies Tesla valuation today. And it's the Robotaxi business. Robotaxi, which is said that Tesla can deliver it before the end of 2022. Now, I don't know whether this is probably too optimistic or not. However, in terms of a bull case idea, I have considered it in 2022 to be real. How did I estimate the revenue of this? Because it's not easy. Now, the idea for that one that I take, it comes from Elon Musk itself. When basically just in January he said and he talked about this Robotaxi business as a percentage of the automotive business. And more specifically, what he said is that this Robotaxi network business can basically add, in the best case scenario, the double of what they are doing with automotive business. Okay, so he said 50 billion in car sales could produce another 50 billion in incremental profit with software margins. Okay, now that is huge, because that would mean pushing all the margins of Tesla higher, because software margins are extremely high, and that overall can push the entire Tesla's margin of all the businesses higher as well. In terms of being more conservative, actually, to try to do a bull case, but which is reasonable, I have taken this, as you can see, revenue percentage of auto revenue, from actually a 6% in 2022, going on 12, 18, and the maximum of a 25% in 2025. From $1 of revenue in the automotive business, they do 25 cents more with Robotaxi. Remember that Elon Musk said for each dollar there is the equivalent of another dollar with Robotaxi, so that is pretty bullish. But 25% as of now, okay? We are going to see later on, I'm going to change that, but let's see what we get with this hypothesis. So the total revenue over there, we go from a 52.6 billion in 2021, which is a growth of 67% from 2020. That's massive, actually beating expectations. So don't come to me and say that this is not bullish enough, guys, because this is extremely bullish for Tesla, okay? It would be amazing and mind-blowing if they're able to actually change their total revenue from 31.5 billion in 2020 to 241.5 billion in 2025. So that's an extreme growth. Let's see what we get. The total gross profit of the entire business, I took it from actually the gross margin from 21.5 to 25.50, with considering the fact that I put as an assumption that the Elon Musk goal is actually becoming true, so the automotive gross margin comes to 30%, and then also with the idea that with Robotaxi taking off, the margins are software margins. So overall, I have considered an EBITDA margin that goes from 13% in what they have done in 2020 to 22% in 2025. Now, this is the real EBITDA, okay? It's the natural EBITDA. If you go to see in Tesla Investor Relation, they have the adjusted EBITDA, but when I do valuation, I like to take the original one. Then here as well, free cash flow to equity, I took it as a percentage of EBITDA, which in the last couple of years has been between 60 and 70. I took it from 60 to 75 in 2025. Now, importantly, this is very important, and I see that a lot of people are not considering this. The dilution of shares, because this has a huge impact on the share price going on in the future. We have seen that over the past 5 years, actually, Tesla diluted a lot shareholders. an average of 11% per year dilution. That's huge. As Tesla becomes more profitable and scale, I imagine and I hope that this dilution actually comes to an end. This is why I went from an 11% average to actually a 6, 5, 3, 2, and then 0 dilution in 2025. And that's a big assumption, but I hope and I think that Tesla can deliver that. Then for the multiples, we see that EV to EBITDA, price to sales, they have been through the roof over 2020. My assumption is that this actually will calm down as well as the price to sales ratio. Coming on to a more of an average that Tesla has traded over the last 5 years. And then for the EV to EBITDA, I'm bringing it from 154x to actually at 30x in 2025, which is the equivalent of what Amazon is trading and also other big tech companies. I know that they are not comparables, I know that, but in terms of growth, in terms of pace on how the company is developing, and also if they are keeping on with the software revenue from Robotaxi, it's just to have an idea, but I think that 30x is something that can make sense, especially if Tesla is able to achieve that huge growth over the next 5 years, which, by the way, the market is expecting this, okay? If they are not able to deliver that, then it's not going to be good for the price moving forward. As I explained to you before, the automotive percentage of the total business will decline moving on in the future. So now let's do the recap. This bull case 2025, actually we have total revenues of 241.5 billion, 25.50% of gross margins, which is the total business, not just automotive, total business. Then 22% EBITDA margin, giving us 53.1 billion in EBITDA. The EV to EBITDA, we said 30x in 2025. That gives an enterprise value of $1.5 trillion. Actually, it's almost 1.6. Cash minus debt estimated 40 billion, market cap $1.63 trillion in 2025. The shares, considering the dilution, 1.26 billion, price target $1,290.56 for Tesla with the EBITDA valuation. Now, price to sales ratio valuation 7x. Market cap 1 trillion.69 divided by the shares outstanding diluted, as we just saw. Market price target $1,334 per share. Free cash flow per share 31.47 free cash flow per share by 2025. Free cash flow yield 3%. Now this is quite bullish, okay? Usually 4 to 5% is more conservative, but for Tesla I put 3%. Price target $1,048 by 2025. Now we put those three valuation methods, these three price targets all together. The average price target for Tesla stock by 2025 is $1,224.76 per share. The price today around $660. That would mean a return over 5 years of almost 86%. We take a discount rate 14% because we saw that the Nasdaq average over the last 10 to 15 years has been 10%. So we want to beat the market 14%. And then we have actually the EBITDA valuation and the price to sales ratio valuation. We will have two different fair prices. $836 today with the EBITDA one, and then $865 for the price to sales ratio fair price one. We do once again an average fair price $851.20 per share today. We take a margin of safety of 30%. We have a price of $595.84 per share. So fair price for Tesla stock today, according to this valuation, $851 per share. So the price of today actually allows you to buy the stock with a margin of safety. Now, why I explained you many times in previous video that I was going to buy Tesla near 500, so the more it was getting near 500, the more I liked the stock, is because it allows me to have this margin of safety even higher, so that even though this scenario doesn't play out exactly as it is in this valuation, which is quite bullish though, I still bought Tesla at a decent price, okay, which allows me for eventual mistakes. Now let's take a look at actually the dream case scenario, because I saw also Cathie Wood coming out with $3,000 per share actually. So let's made this kind of dream case scenario, so extremely bull case scenario with the assumption that Elon Musk said, especially about Robotaxi, and see what we get. Now, the first thing that I will do is to put this, so the Tesla market share, to 25% and not just 20. In order to do that, we have to put 5 million vehicles delivered by Tesla in 2025. That would push the automotive revenues to 210 billion in 2025 for Tesla. Now, remember the article, remember what Elon Musk said back then in January? 50 billion in car sales could produce another 50 billion in incremental profits with software margins. So actually, when we go there, what we do, instead of my 25% assumption, I feel more comfortable with, let's do the Elon Musk scenario, right? So we double what Tesla has done with the automotive revenues. We double it with Robotaxi, as Elon said. That will push the total revenue of Tesla 2025 448.9 billion. That's huge. Obviously, this will increase as well the EBITDA margin, because remember, Robotaxi is software revenue. So I think that this one is fair enough to put it until 25% if we deduce that amount of revenue from it. So let's keep the multiple the same, everything the same, and let's see what we get in terms of the bull case with this dream case assumption. And actually we have a price target with the EV to EBITDA valuation of $2,700 per share, actually, with the price to sales ratio almost $2,500 for Tesla. The free cash flow, $2,200 for Tesla. Average, $2,462, basically very near to $2,500 for Tesla. That would mean that Tesla can do a 2.7x over the next 5 years. Obviously, by being honest, I prefer the normal scenario that I showed you before. I think that, yes, this will be great if it happens. However, as I told you many times in previous videos, I don't like to base my investment ideas on dream case scenarios. I personally don't see that this is extremely likely, and so because of that, I prefer to actually have in mind this more normal case scenario. Yes, it's still bullish, because 4 million by 2025 is bullish. Don't get me wrong, but it is achievable, in my opinion. More achievable, more likely than the dream case scenario. So that's just my opinion. Leave me down a comment with your opinion. At least you are seeing numbers. You are seeing actually what can be possible with Tesla. And this is not just random talking. I hope you find the video interesting, guys. And leave me down a comment below with your price target for Tesla, your opinion. I love to read everything, even if you are bearish, whatever. I like to read everything. And subscribe to the channel if you want. And as always, guys, have a wonderful day.